The gap between what is on television and what is happening inside corporate America is the most important thing to understand about today's market. In fact, the economy is being powered by several overlapping engines of growth, not just one. This update walks you through what we are seeing, what is driving it, and how we are thinking about it inside your portfolio. Our goal here is not to make a market call. It is to help you understand why the market is doing what it is doing and how a diversified investment plan is designed to participate in this kind of environment without being dependent on any single theme. Engine number one, fiscal stimulus and the budget expansion. One underappreciated pillar of economic strength is the scale of fiscal stimulus currently flowing through the system. The federal government is running a historically large budget deficit, and that spending, whatever one thinks of the policy debate, is unambiguously stimulative for the economy. The tax cuts embedded in the One Big Beautiful Bill legislation have put more money into the hands of businesses and individuals alike, supporting both consumer spending and corporate investment decisions. Importantly, this is not purely a domestic story. NATO allies and partners around the world are rapidly scaling up their defense budgets in response to geopolitical pressures. That global defense spending surge is a significant source of demand for U.S. manufacturers, aerospace companies, and technology providers. Stimulus that reaches American workers and shareholders, even if the spending decisions are made in Brussels or Berlin. The combined effect of domestic fiscal expansion and an allied defense buildup represents a tailwind for corporate revenues that the news cycle rarely highlights, but that shows up clearly in earnings reports. Engine number two, the hyperscaler capital expenditure surge. First quarter 2026 earnings calls from the four largest cloud platforms, often called the hyperscalers, have effectively repriced the entire capital spending outlook for the next 2 years. This is one of the biggest cylinders in the global economic engine right now. Let's start with Microsoft. They now expect to invest roughly $190 billion in CapEx during calendar 2026, well above the $154 billion Wall Street have been modeling. Meta raised its 2026 capital spending range to $125 to $145 billion. And Google lifted its 2026 guidance to $180 to $190 billion and explicitly told investors that next year, in 2027, spending will be significantly higher again. Amazon's leadership reminded investors that in periods of accelerating growth at Amazon Web Services, capital investment leads revenue, implying that the spending wave has further to run. Aggregating those numbers, Morgan Stanley now estimates U.S. hyperscaler capital spending will exceed $800 billion in 2026, roughly double the 2025 figure, and triple 2024. Their team projects that 2027 spending could approach $1.1 trillion.